first on Intel, the modem chip deal with Apple, and sort of your general view, having had some information out of the quarter on what hardware looks like now.
Yeah, I mean, I think when you look at Intel, I mean, it's great that they sold that business off to Apple, but you have to remember why we're in this spot in the first place. Intel bought that business a fair number of years ago, invested a ton in that business, and is now selling it for $1 billion. And it really shows that, unfortunately, Intel just not particularly good at doing things outside of microprocessors, unfortunately. Don't forget they sold off McAfee, which they had bought as well, as they figured out that didn't work out either. And they're losing share to AMD. So I think that's why you're seeing the fact that the stock is actually down off of a beat and raise quarter that came in much better than people thought on revenues and margins.
After getting Texan and some other names, has the needle changed in semis? I mean, as more have come out and tried to call the bottom of the cycle?
Yeah, I mean, normally I would say, it's a great time to think about being bullish. The problem is that you've got the semiconductor index, up a lot this year already. It's up about, close to 40%. And so it's very hard to say, oh, well, great, it's near the bottom, but, things are still pretty bad. And these stocks are near all-time record highs, and the multiples, and as you'd expect, with estimates coming down and the stock's up 40%, the multiples have gone, incredibly high. So semis is one of those areas. I have to admit, I'm just sitting here scratching my head going, okay, if people want to keep buying names when the estimates keep going lower, then have at it. But it's not something I'm interested in with stocks, the index up 40% year to date.
And Dan, to close out on semis and Intel specifically, that idea of losing share to AMD isn't new, but Intel's results are. So why down after results?
Well, I think it's what we just talked about. Intel stock, if you go back through its history, it always struggles when AMD is gaining share. And I think the problem right now is AMD's coming from a really low level. Obviously, it's 5% market share in the server market. And if you go back to history, they've gotten up to 25% before. So when you're looking at that, it implies a lot of price pressure. And, you think about next year, that's when things are really going to get a lot more competitive. And you've heard about Intel supposedly cutting prices to try to compete with AMD. And I think that's the real issue between the two of them, because it really is a duopoly, obviously. And so AMD's share has to come out of Intel's hide going forward, and that's why you're seeing this. I mean, I'm definitely surprised Intel stock is down today because relative to expectations, which has been sort of the name of this earnings season, I would argue the revenues and the earnings are much better. Surprisingly, investors are actually thinking forward and going, yeah, but my real problem is how much share is Intel going to lose in their most profitable division, which is servers, going forward, and that's why you see the stock reacting the way it is.
Youssef, I want to turn to Amazon to get your take on the results. With growth in its cloud business coming down a little bit, is it time that perhaps Wall Street should be questioning some of Amazon's very high spending and still unproven businesses, such as groceries or even this one-day shipping? It seems like the street just accepted that costs were going to be higher and profits were going to be lower. Yeah, so what's impressed us yesterday with Amazon is actually the reacceleration in both unit growth and in revenue growth. And management made it very clear that a big part of that reacceleration was really this one-day shipping, which they had just introduced in the quarter. To your point about expenses, it did come out higher. They wouldn't quantify how much. Initially, they said $800 million. We think it came closer to $900 million. I think they're testing and learning themselves. But remember back in 2005 when they launched Prime 2-day shipping, it did have a negative impact on margins. But then what it did over the following 10 years, it had dramatically expanded the TAM. It had dramatically reaccelerated growth. And I think that's probably what we're going to see now. But Youssef, are the challenges this time around different? I mean, they're under far more regulatory scrutiny. They've got a number of challenges internationally. Is it different than perhaps in 2005 when they began Prime 2-day shipping? Hard to say. I'm not really sure it's that different. I think there's clearly more regulatory scrutiny, but it's very hard to make a
a case that Amazon is a monopoly. If you look at their penetration of even online commerce, it's about 35%. If you look at their penetration of retail in general, it's mid to high single digits. So, and there are a whole number of other players, smaller players that are being very successful online, particularly in the DTC side. So yes, regulation, I think, is something to keep an eye on, but it has not gotten reflected in the numbers yet, and we don't think it's going to get reflected in the numbers.
Youssef, on Alphabet, Google, how did so many people get it so wrong? I mean, they've been in the doghouse for at least a quarter, and here they come charging back, reminding everybody what they're good at.
Well, we'll blame it on the lack of a clear explanation for what happened in Q1 when their growth rate went from the low 20s, about 22%, down to 19%. And that's 300 basis points. It's a big, big drop for a company like Google or Alphabet, excuse me. And I don't think management did a great job explaining why. So linear thinkers, as we all are, we all assume that the rate of growth is going to continue to decelerate. Some channel checks we did throughout the quarter implied about 100 basis point decel. And lo and behold, they showed a reacceleration, a nice reacceleration. YouTube did really well. Search, mobile search did really well. And even desktop search, which is 20 years old, is also, still growing. It was the third largest contributor to growth. So I think that's basically what happened. And then GCP at $8 billion, that was pretty impressive. About 18 months ago, it was at about $4 billion. So over 18 months, it grew at about 100%, which tells you that they're actually gaining a little bit of share from AWS and from Azure.